Are you merely floating through your financial life, or are you steering confidently toward a future of security and peace of mind? It's a question that may hit hard, but it's one we must all confront. Welcome to Mr. Smart Pockets, where we're about to delve into an essential topic for any forward-thinking individual: building an emergency fund. This isn't just advice, it's a roadmap to safeguarding your future against life's unpredictabilities. A tale of caution, John's story. Let's begin with a story that's all too common. Meet John, a dedicated professional whose life was turned upside down by an unexpected medical crisis. With no emergency fund to fall back on, he found himself in a financial tailspin. Drowning in debt from high-interest loans and maxed-out credit cards, John's plight is a stark reminder of how crucial an emergency fund is. Imagine if he had that safety net, a financial buffer that could have absorbed the shock, transforming a crisis into a manageable situation. The journey to building an emergency fund. Embarking on the path to financial resilience? The initial steps toward building a robust emergency fund might seem modest, but their impact is monumental. Begin by setting a realistic yet impactful goal: saving $500. This amount, though seemingly small, can be a lifesaver in unexpected situations. From there, elevate your ambition. Gradually expand your savings target to encompass 3 to 6 months of living expenses, creating a cushion that can withstand life's surprises. But why stop there? Challenge yourself further. Aim to accumulate a year's, or even 2 years' worth of expenses. This isn't just about saving, it's about crafting a foundation of financial security that will bolster your journey towards true financial independence. Remember, each dollar saved is a stepping stone towards a future where you control your finances, not the other way around. This journey of prudent budgeting and strategic saving isn't just a financial plan, it's a commitment to a life of freedom and peace of mind. Selecting the optimal savings solution for your emergency fund. When it comes to safeguarding your emergency fund, the choice of account is crucial. You need a balance between accessibility and growth. High-yield savings accounts are an ideal choice, providing a safe haven where your funds can earn a competitive interest rate, significantly higher than standard savings accounts. Typically, these accounts offer annual percentage yields, APY, ranging from 0.5% to over 1%, subject to market conditions and bank policies. To find the best high-yield savings account, start by exploring online banks, as they often offer higher rates compared to traditional brick-and-mortar banks. Websites like Bankrate, NerdWallet, or FDIC's own comparison tools can guide you in comparing current rates, fees, and minimum balance requirements. Remember, the key is to ensure your emergency fund remains liquid. This means avoiding accounts with penalties for withdrawals or high minimum balance requirements that could limit your access to funds when you need them most. Look for accounts that offer features like online banking, mobile app access, and no monthly maintenance fees, making your emergency fund both accessible and cost-effective. Also, consider the stability and reputation of the financial institution. Opt for FDIC-insured banks or NCUA-insured credit unions to ensure your funds are protected up to legal limits. By carefully selecting a high-yield savings account that aligns with your needs, you can optimize your emergency fund's growth while maintaining the essential quick access required for unforeseen circumstances. Guidance from the experts. The Barefoot Investor, by Scott Pape. Scott Pape in The Barefoot Investor introduces the concept of the Mojo account as an emergency fund. He emphasizes the psychological comfort of having a safety net, suggesting readers save a specific percentage of their income into this account. Pape's approach involves immediate action steps, like setting up a dedicated savings account for this purpose and automating transfers to ensure consistent savings. The Total Money Makeover, by Ramsey. Dave Ramsey in his book underscores the emergency fund as the foundation of financial stability. He proposes the baby steps method, where the first step is to save $1,000 as a starter emergency fund. Ramsey's approach is about creating a sense of security that empowers individuals to tackle subsequent financial challenges, such as debt repayment, without the fear of unforeseen expenses. I Will Teach You to Be Rich, by Ramit Sethi. Ramit Sethi approaches emergency funds as part of a holistic personal finance strategy. He advocates for an automated savings system where a portion of income is directed towards an emergency fund each month. Sethi's method focuses on effortless saving, suggesting that by automating your finances, you can build your emergency fund without actively thinking about it. The 21-Day Financial Fast by Michelle Singletary. Michelle Singletary's book emphasizes self-discipline in finance. The 21-Day Financial Fast is a period of introspection and frugality, where the reader is encouraged to save aggressively. She suggests using this period to kickstart your emergency fund, highlighting the importance of having financial reserves for unexpected life events. The Financial Diet, by Chelsea Fagan and Lauren Verhage. This book targets young adults, offering practical advice on building an emergency fund. Fagan and Verhage discuss setting realistic savings goals and finding ways to cut back on expenses to feed the emergency fund. They also stress the importance of keeping this fund separate from other savings to avoid the temptation of using it for non-emergencies. The Simple Path to Wealth, by J.L. Collins. J.L. Collins in The Simple Path to Wealth highlights the role of an emergency fund in the broader context of wealth building. Collins advises on maintaining a cash reserve to manage unexpected expenses without disrupting investment strategies. He emphasizes that an emergency fund is not just a financial tool but also a buffer against life's uncertainties, allowing for peace of mind. Each of these books offers unique perspectives and strategies on building an emergency fund, underscoring its critical role in achieving financial stability and independence. They provide a blend of practical advice, psychological insights, and actionable steps that can guide readers in establishing and growing their emergency funds effectively. You can find links to these essential reads in the description below to explore their strategies in detail and strengthen your financial safety net. Expanding your safety net. Growing with your income. As you climb the ladder of financial success, your lifestyle and expenses often evolve. It's crucial that your emergency fund reflects these changes. For instance, if you get a raise or promotion, consider adjusting your emergency fund contribution accordingly. A practical approach is to maintain the emergency fund at a level that covers at least 3 to 6 months of your current living expenses, including any new financial obligations you may have acquired. This way, as your income grows, your emergency fund grows in tandem, ensuring it remains a robust safety net. Utilizing windfalls. Windfalls, such as tax refunds, work bonuses, inheritance, or monetary gifts, present a unique opportunity to bolster your emergency fund significantly. Instead of viewing these as opportunities for spending or indulging, redirecting them to your emergency fund can dramatically accelerate your progress towards your savings goals. For example, if you receive a $2,000 tax return and add it to your emergency fund, you not only increase your financial buffer but also save on potential future interest costs in case you would have had to borrow money for emergencies. It's about transforming one-time gains into long-term financial security. Making it a habit. Regularly diverting a portion of windfalls to your emergency fund should become a habit. This not only speeds up the process of reaching your target fund size but also ingrains a discipline of saving and financial prudence. It teaches you to prioritize your future financial security over immediate gratification. Balancing with other financial goals. While channeling windfalls into your emergency fund is wise, it's also important to balance this with other financial goals. If you're carrying high-interest debt or have significant investment opportunities, it might be prudent to allocate a portion of your windfall to these areas. A balanced approach ensures that you're not just preparing for potential emergencies but also actively improving your overall financial health. By consistently growing your emergency fund with your income and utilizing windfalls wisely, you're not just building a financial buffer. You're crafting a mindset of financial resilience and security, essential for navigating life's unpredictable financial challenges with confidence and ease. The psychological aspect of saving. Building financial confidence. Consistently contributing to an emergency fund does more than just accumulate money, it builds financial confidence. Each deposit is a step towards self-reliance, reducing the anxiety associated with financial uncertainty. This habit instills a sense of control over your finances, much like we discussed in the Mr. Smart Pockets video on building wealth through passive income. The process of saving becomes a testament to your ability to plan for the future and make prudent financial decisions. A testament to discipline. The discipline required to maintain and grow an emergency fund is invaluable. It's about making a conscious choice to prioritize long-term security over short-term desires. This discipline, once developed, spills over into other areas of financial management, such as investing wisely or avoiding frivolous spending, as we've explored in previous Mr. Smart Pockets videos on smart spending habits. The perils of neglect. The debt trap. Without an emergency fund, unexpected expenses can force you into high-interest debt options like credit cards or payday loans. This situation can quickly escalate into a debt spiral, where you're paying off not just the principal amount but exorbitant interest as well. As we discussed in our session on avoiding bad debt, falling into this trap can be both financially and mentally taxing. Compromised financial goals. Neglecting to build an emergency fund can also jeopardize your long-term financial goals. For instance, if you have to dip into your retirement savings to cover emergencies, you not only withdraw the principal amount but also lose out on potential compound interest. This can set back your retirement planning significantly. Stress and anxiety. The lack of an emergency fund can lead to constant stress and anxiety over financial security. This emotional burden can affect not just your financial decisions but also your overall well-being. Building an emergency fund provides a psychological cushion, giving you peace of mind that you're prepared for life's unforeseen events. In conclusion, an emergency fund is a critical component of a well-rounded financial strategy. It's a buffer against life's uncertainties and a tool for maintaining financial and psychological stability. As we've seen in various Mr. Smart Pockets episodes and the books discussed in this video, building and maintaining an emergency fund should be a top priority for anyone serious about achieving financial independence and security. Your stories and strategies now, it's over to you. What has been your approach to building an emergency fund? Share your stories and strategies in the comments. Let's pool our knowledge and strengthen our collective financial defenses. A call to action for financial preparedness today is the day you start laying the foundations of your emergency fund. It's a commitment to your future self, a declaration that you won't be caught off guard by life's uncertainties. Hit the like button if you're ready to take this crucial step, and share this video to spread the message of financial preparedness. Subscribe to Mr. Smart Pockets for more invaluable financial wisdom, and together, let's embark on a journey towards a future where emergencies don't spell disaster, but just a minor hiccup on your path to financial success. Remember, for in-depth advice and practical steps on building your emergency fund, check out the recommended books in this video. Links are in the description. Embark on this journey with us, and let's transform your financial narrative into one of resilience, security, and unwavering peace of mind.